This is the Asia Trade. I'm Shery in Tokyo.
And I'm Paul Allen in Sydney. The top stories this hour. Asian stocks set for a positive open as investors await the Fed's preferred inflation reading later on Friday. Treasuries gaining as other data points to a further downshift in US growth. Traders pricing in extra volatility with the likely US presidential contenders about to face off in a televised debate. We'll be live in Atlanta. Plus, we'll assess the impact of the weak yen on Japan's tourism sector with IHG Managing Director Abhijay Sandilya. All right, some breaking news for you right out of the gate, out of South Korea. This is industrial production numbers for the month of May. Bit of a mixed bag here. On month, seeing a contraction of 1.2%. That was worse than the very slim 0.2% expansion that we were expecting. On year, though, that figure still expanding. 3.5% gain for South Korea's industrial production in May on a yearly basis. And that is better than the 3.1% expected. But that monthly contraction, a bit of a surprise there. We did see a likely moderation in automobile output. Export growth decelerated in May in South Korea as well. Semi-exports, though, Shery, still pretty strong in South Korea, moderating a little. But those production numbers, yeah, as I say, bit of a mixed bag there.
Yeah, a lot of data, not to mention, of course, geopolitical risk that markets have to digest on this final trading day of the week across Asia. We're talking, of course, about the U.S. presidential debate coming up. A lot of historical firsts. The first time that a sitting president is debating a former president. The first time that a convicted felon is the candidate of a major party. And, of course, the oldest candidate for major parties ever in the U.S. Not to mention snap elections in Iran and France. Iran for the presidential election on Friday, and of course the parliamentary elections in France as well.
Yeah, first today in India as well. We've been waiting a long time for this, but today is the day, Shery. JP Morgan adding Indian government bonds to its benchmark emerging markets index today. The entire Indian government bond market worth well over $1.7 trillion, but not all of that's going to be investable. About $400 billion worth is going to be investable, but inflows have been steadily rising here ahead of this inclusion. And Goldman Sachs sees another $30 billion in inflows in the coming months as the weighting of Indian bonds continues to increase by 1 percentage point per month for the next 10 months.
We'll be watching really the bond space across the U.S. as well overnight, right, Paul? Because we had some conflicting economic data, mostly showing a slowing economy that perhaps could lead to the Fed being able to cut rates. All of this ahead, of course, of the PCE data that we're expecting today. That's the Fed's preferred gauge of inflation. But given, of course, that we're headed towards that very significant number, we have seen a little bit of sideways trading in the overnight session. Take a look at U.S. futures gaining about 0.1%. But it fluctuated throughout the session, and we saw the 10-year yield also take a hit given those numbers that included the first quarter GDP being revised downwards, not to mention that continuing jobless claims are now at the highest level since 2021. So we're seeing a little bit of a slack in the demand outlook for the labor market. But take a look at the setup across Asia because, of course, we continue to be on yen watch, and that, of course, as we wait for that PCE number and, of course, how the rate differentials will really play out. In the meantime, in Japan, we have seen the 10-year JGB yield really shoot up because of expectations that the BOJ might have to move to tighten given the weakness of the yen. Sydney futures at the moment up 0.3%. What we've been watching has been the Aussie dollar because we continue to see more consumer inflation expectations continuing to rise. Will that lead to a more hawkish RBA, of course, is the question, Paul.
Yeah, let's get a little bit more analysis with Jeff Hughes, Senior Market Strategist at BNY Mellon. And Jeff, I want to start off with the yen there. As Shery mentioned, really a victim of that rate divergence story, and we can see it weakening to levels that we've not seen since the mid-1980s. We're at an all-time low against the euro as well. So where's the bottom here, and is there a credibility issue for the Ministry of Finance if it doesn't act, if it doesn't do something, because we're past the threshold now where it intervened last time?
Good morning. Well, they've always been clear. It's not about levels. It really is about volatility. And looking at the price actions so far this week, I guess it's been manageable. You could also point to fundamentals elsewhere. If the data risk to the US is to the upside and the yield risk is to the upside, then yen and other low-yielding Asian currencies are going to struggle. But of course, they will be monitoring this. If inflation expectations continue to surge in Japan, and they'll get more data on that, then well, we've felt every BOJ meeting up ahead is live meeting, and I think markets will have to position accordingly.
Yeah, and if we think about it in those terms, that long-term story is kind of still intact. You know, we do still expect to see Bank of Japan tightening sometime this year, and I know you see Fed easing now in September. So is this problem with the weak yen, to some degree, just going to take care of itself in the next few months?
Well, we have been expecting that for several quarters now, but going back to what our custodial data is showing, there's also a very, very large underheld yen position out there. So people still do own the carry trade, and what we're looking for is perhaps some of that unwinding, at least for the yen to accelerate up ahead. But we do need the catalyst, and the catalyst, of course, has to be on the Fed side, has to be on the US yield side, rather than the BOJ side, unless they really surprise to the hawkish side with regard to interest rates, which probably is a little less likely right now compared to what's going on with the Fed. But it's a dynamic process. Now, if both happen at the same time, we have a much more hawkish than expected BOJ and Fed easing, then I think that's where significant downside in dollar yen is certainly possible.
Jeff, how much are you pricing in the presidential elections and, of course, what happens afterwards, which seems to be that both candidates, whoever wins, will just open the fiscal taps even more? Will that alter the calculations for the Fed?
Well, I think it will alter a lot of things, and the fiscal taps right now, that really is what we are most concerned about. Now, at the beginning of the year, we were expecting the Fed to be a lot more dovish, but even so, we actually had expected the 10-year, for example, to perhaps edge closer to 5%, not because of inflation expectations surging, but also, because of the fiscal situation in the US. I mean, just being based in Europe, talk about France quite a bit. Which country did the OECD anticipate to have an even worse deficit situation compared to France? Actually, it is the US. But as we saw over the last 2 or 3 weeks, when the market is searching for a safe haven, even in a fiscal context, the US will still outweigh that. But I guess up ahead, the fiscal conversation, that will certainly give the dollar a bit of a challenge, so to speak, and the Fed will have to take that on board accordingly as well.
What are the implications for Asian currencies? And of course, we discussed the Japanese yen, but what about the Chinese yuan, which has also seen weakness? I know that you have a more constructive call on China, but how does that relate to your yuan call as opposed to perhaps a broader economy and perhaps some recovery that you're seeing there?
Of course. So on the constructive side, certainly it's more asset allocation where we are constructive, and because, quite frankly, it's a very under-owned market right now relative to benchmark. We're seeing that in our data, equities, corporate bonds, for example, flows haven't been as strong, but that's where the reallocation process can start, and we're looking forward to the plenum, of course. Now, for Asian currencies as a whole right now, there is the US element, but conversely, there also is the renminbi and the yen element. If you think about regional competitiveness and the like, with Chinese and Japanese yields relatively low, and with the renminbi and the yen relatively weak, then that's sort of inhibiting other Asian currencies from realizing their valuations as well. So sort of holding back other central banks, so to speak. Hence, we need a Fed catalyst. But if there's room for China to do better via reflation and also for the yen to strengthen, I think that opens up a whole new asset allocation play for Asia as well, which is something we're following. In our data, every single APAC currency, apart from the Indonesian rupiah and the Singapore dollar, is being underheld right now. So plenty of opportunities for mean reversion.
Do you have a floor for the yuan, Jeff?
So at this point, again, a bit like the yen, actually, it really is about pace rather than levels. I think in the past, we've seen that 5% to 7% a year range for movements, and we do take that on board as well. But the PBOC and the BOJ alike, they will be pointing to US yields as well. If, going back to the US fiscal conversation, there isn't a ceiling for US yields, then that could, in the short term, be supportive for the dollar as well. And given Asian investors be it official or otherwise, they are heavy investors in the US Treasury market, and we've seen a bit of a pickup of late. I think it really is up to them, again, to reassess the fiscal premium in the US, which, quite frankly, hasn't been done enough over the last few quarters or so.
And Jeff, before we let you go, of course, we have India's big debut of its bonds in global indices. And Goldman Sachs even saying that that could attract, what, $3 billion of inflows every month, at least for the first 10 months. How much do investors need to factor in the fact that it still remains pretty difficult to do business in India?
Well, this is a challenge, but also an opportunity, of course. And in our data during the index inclusion process, and for China, we saw a strong wave of over a year and a half of, almost a straight line purchases of Chinese government bonds. And for example, and India can absolutely achieve the same. So this should be seen as a catalyst for further opening up of the financial sector and investment channels for international authorities as well. If I speak to clients in Europe, for example, getting a lot of questions about this, they're heavily interested in trying to shift allocations there as well in an environment where everyone's overweight US assets, be it bonds and equities alike, and is screaming for alternatives. This is a really good alternative here, so it really is incumbent upon the authorities to really do more to allow that, take advantage of the demand while it is there. So that's something we are going to be positive on and monitoring closely on our data up ahead.
Jeff, good to have you with us, senior market strategist at BNY Mellon there. And of course, one of those risks for the markets that we discussed was the presidential election in the U.S. Well, President Joe Biden and former President Donald Trump will meet soon for their first televised election debate, which begins in less than 2 hours in Atlanta. Bloomberg's David Gura is there for us. David, so lots of historic firsts being achieved in this presidential election. Tell us a little bit about how much is at stake at this debate.
Yeah, it's an incredibly important debate happening very early in the election cycle. Usually these debates don't happen until we get through the Democratic and the Republican political conventions, but this one is happening earlier. It's one of two that are on the calendar. There's another one scheduled for September the 10th. We'll see if we get there. If we don't, this could be the one opportunity that voters have to see both of these stages to some degree in this debate, but I think style is going to overwhelm that. There are a lot of people who just want to see what these candidates look like on stage, how they interact with one another, how they interact with the moderator, how they respond to questions, and there are questions and concerns about the capacity of both of these candidates to stand for another term in the White House. So we'll look for that when they're on stage today, and I'm here in the spin room, which is actually in the basketball arena at Georgia Tech, so a little ways removed from where the actual debate is going to take place, in a TV studio without any audience around the candidates. And one of the people with whom I spoke is Governor Brian Kemp, who's the Republican governor of Georgia. And I asked him about something a little bit earlier today that I heard from Rob Portman, the former senator from Ohio, Republican senator. He said what's fascinating to him about this debate is really what these two candidates are catering to is a sliver of the U.S. population. It's about 100,000 people in 6 or 7 states. It's a really narrow base of voters who haven't made up their minds. Now, let's take a listen to what he had to say in response to that. Again here, this is the governor of Georgia, Brian Kemp.
That's a good point in a lot of ways, is you got to appeal to those people that are thinking right now, I'm not going to vote, or I'm going to vote for somebody else, or I don't know who I'm going to vote for. And being able to appeal to them, not by pandering to them, but just say, look, how am I going to make your life better? And being likable to them. And that's going to be what's on stage tonight.
We'll see if we get there. Again, this is an argument that both of these candidates have to make, Shery and Paul, whether or not somebody who's undecided should go with one candidate versus the other. We'll see if we get past the style into the substance, and maybe some minds are changed over the course of this debate tonight.
Yeah, David, in terms of that, there's been a tremendous amount of focus on the age of both candidates, the criminal record of one candidate, and a lot of questions about style as well. But are we expecting to hear anything interesting in terms of policy or a policy debate?
So we know that Joe Biden, the current president, has been at Camp David, the retreat outside of Washington, D.C., and he's been prepping in a very traditional way for this debate, meeting with his closest policy advisors, going through policy briefings, and doing mock versions of the debate that we're going to have tonight. Donald Trump has been preparing in a very different way, but characteristic with how he's prepared for previous debates. He's been on the campaign trail, giving speeches to large audiences, and as we understand it, kind of having conversations with his policy advisors here and there. There are a great many questions one could ask about the economy, about foreign policy, about the war between Israel and Gaza, and Hamas in particular, and about abortion, which has come front and center because of a Supreme Court decision today. Again, I think we'll see how these candidates respond to those questions. I don't doubt that the moderators, Dana Bash and Jake Tapper from CNN, who are going to be moderating this debate, have sort of homed in on, prepared for asking very detailed questions. We'll just have to see whether or not the candidates are willing to engage in good faith with the questions that they're posed tonight.
And David, of course, we're not expecting to hear too much detail when it comes to foreign policy, but still, given the consensus that we have seen in Washington, especially in the last few years, against China, are we going to see some more clarity when it comes to perhaps trade tariffs that have been talked about for a while now?
I think that there will be a push to get more clarity on that front. I was just talking to Gavin Newsom, the governor of California, who's here as a surrogate for Joe Biden. He brought up those tariffs and the former president Donald Trump's plans to expand those quite widely. Perhaps we'll get more color on that tonight. I think that's something that I'm, of course, wanting to hear more clarity on. I think, we also want to hear more clarity just about sort of what his plans for the economy are. An argument that he makes a lot on the campaign trail, this is Donald Trump, is that the economy would be better under a Trump presidency. We haven't really had a very well crystallized sense of what would be different. He claims that inflation would be lower. How is he going to do that? How is he going to engineer that? What's he going to do with the debt and the deficit? I think that these are questions that I assume the moderators will raise over the course of the debate, but perhaps Joe Biden, the current president, will ask as well or try to prompt the former president to answer over the course of the debate.
All right, Bloomberg's David Gura there in Atlanta. And you can tune in to our special coverage of the CNN presidential debate. That starts in the next hour, 8 a.m. Hong Kong, 10 a.m. here in Sydney. And you can also tune into your Bloomberg. For more on this, you can go to TLive Go, TLIV Go, to get commentary and analysis from Bloomberg's expert editors. This is Bloomberg.
China's ruling Communist Party has expelled 2 former defense ministers on corruption charges. It ends speculation over their fate after a spate of purges rocked the defense hierarchy. Our China correspondent Min Lo joins us now from Hong Kong with the details. And Min, we've heard now strong language from state media about the reasons behind these expulsions. Tell us more.
Yes, it's quite unprecedented that 2 former defense ministers are ousted on the same day. Of course, I suppose it should come as no surprise that one of them was the former defense minister Li Shangfu, who was abruptly dismissed from his position last year, making him one of the shortest-serving defense ministers in China's history. Party investigation has found him suspected of taking and offering bribes, and his predecessor Wei Fenghe was defense minister from 2018 to 2023. Both men were found to have violated party and organizational discipline. They had sought to take advantage of their positions by offering benefits for others in exchange for huge amounts of money. They had sought advantage for others when it comes to personnel arrangements, and according to state media, their violation had been very serious in nature, and both men had brought great harm to the nation's national defense and armed forces. Both men will face criminal prosecution, and their dismissal from the party will be confirmed by the Central Committee, which will convene in July.
Min, is this perhaps just the start? Is it part of a broader anti-corruption drive in the military?
Yeah, I mean, look, these investigations go on for many months. It's been going on for some time now. And it's not just these 2 senior, very high-profile officials that have taken downfall recently. In November, 9 senior PLA officers had been dismissed from their position in the top legislative body, the National People's Congress. And among them were the commanders of the rocket forces, including 2 of their deputies as well, and someone from the Rocket Force Equipment Development Program. And previously, Presidency had gone after after two former vice chair of the Central Military Commission under his predecessor as well. So it's hard to say whether this is part of presidency's ongoing campaign to consolidate power by putting people he trusts in power, or perhaps a broader purge to really upgrade the military and root out corruption, given the escalating security situation just globally, with China increasingly clashing with countries like the Philippines over the South China Sea and over the Taiwan issue as well, and with US in the mix, drawing closer to China's neighbors like South Korea, Japan and Australia with all these security exchanges. And of course, it could also help to bolster the party's legitimacy, with presidency seen as fulfilling his promise to really crack down on corruption at all levels, catching those tigers and flies, as he put it in a speech many years ago.
Very colorful. But I mean, of course, we finally got the dates for the third plenum, July 15th to 18th. Such an important policy meeting that we've been awaiting for. What can we expect?
Yes, finally, after many months of delay, this is really the first time in over 3 decades that the plenum is being held in an off-schedule year. Normally, it would have been held last year, usually in the second year after the party congress. According to state media, further deepening reform and modernizing the country will be a major theme, and state media also emphasizing that the party should take the lead here. And look, analysts and investors really have been looking for signals of what kind of policy reforms can be coming in the next 5 years. There are a lot of expectations, especially when it comes to how to address youth unemployment, for example, because presidency had highlighted that as a major priority. Goldman Sachs had published a note saying that there could be changes to taxes, perhaps increase in tax rates and broadening of the tax base to provide a new form of revenue for local governments whose profits have been squeezed by that ongoing property downturn that really led to a collapse in land sales. Some analysts suggest that it could pave the way for an expansion of Treasury bond to help fund more science and tech investment programs. And obviously, we also want to look out for structural reforms and how the government will really prioritize those so-called new productive forces, your quantum computing, high-tech sectors, EVs and the like. So lots to look out for in the third plenum.
All right, Bloomberg's China correspondent Min Lo there. Well, the U.S. ambassador to China says Beijing has misjudged the impact of its support for Russia's war in Ukraine. Nicholas Burns told us China is not remaining neutral in the conflict and further sanctions are possible.
We put a red line in front of the Chinese 2 years ago, just after the Russian invasion of Ukraine, and we asked the Chinese government not to extend lethal assistance to Russia. We don't believe the government has done that. But what's happened is that the government of China has permitted a considerable number of Chinese firms to sell dual-use technology into the Russian defense industrial base, so that defense industrial base is far stronger now than it was even at the beginning of the war. We're strongly opposed to this. We think it's escalatory. And Putin has launched a brutal war against Ukraine's government and civilians, and it ought to stop. Chinese say, well, we're neutral in this war. They're not neutral. The actions of the government in allowing Chinese firms to sell these dual-use technologies is very troubling. It's damaging to the effort to end the war, and China is not exhibiting the behavior of a neutral country. So it's a very important difference we have, and we've complained to the Chinese about this at great length, at very senior levels. And as you know, we've begun to sanction individual Chinese companies involved in this. We're going to continue to do that because we have not seen any change in the position of the government of China to help the rest of the world, and certainly Europe and the United States, end this war and make sure that Putin can no longer rain terror down on Ukrainian civilians.
From your position as the ambassador in Beijing, how do you think China is
waiting for the Japan market opens as we watch the Japanese yen still holding around the weakest level since 1986. It's been really a tight range of trading we are now getting the Tokyo CPI numbers right now. Excluding fresh food, we are getting the core inflation at 2.1% year-on-year. The estimate was for 2%. So this is actually a little bit of a beat for the month of June. Of course, not surprising given that a cheaper Japanese yen has led to higher inflationary pressures, and the Tokyo headline number really leading to those Japanese numbers later on. So we are getting the core CPI as well, exclude energy as well, and its gain of 1.8%. The headline CPI acceleration of 2.3% as well, above that 2% level for another month. We're getting the jobless rate as well. We are now seeing it come in at 2.6%, which is the same level as the previous month, is also what economists had expected. The job to applicant ratio, though, we are seeing a little bit of softening. 1.24 is the number, and really a fall from the previous month. And that's for the month of May. Of course, a lower number just means that there are a fewer number of job openings relative to the number of applications. We'll keep track of the latest data out of Japan. We do have industrial production numbers in just a few minutes as well. But as I was saying, it's really the Japanese yen that we're watching very closely at the moment, because at any time we could get some sort of intervention from authorities if they don't like the pace of depreciation. So far, we've heard from the Finance Ministry, from the Vice Finance Ministry. We're waiting for U.S. PCE numbers to see where Japanese authorities go from here, especially given that the driver of the Japanese yen has really been that rate differential with the U.S. But it's really the weakness of the yen that has led to a surge of tourists to Japan, right? It's all over 3 million foreign visitors in May for a third straight month, up around 10% on pre-COVID levels. Let's discuss this with Abhijay Sandilia, Japan and Micronesia Managing Director at IHG Hotels and Resorts. Great to have you here in the Tokyo studio.
Thank you, Shery, and thank you for having me.
Let's discuss a little bit how the cheap Japanese yen is leading to perhaps some changes within your corporation. Are you seeing more attention within IHG Group in this region?
Absolutely. Japan is a global priority market for IHG, and in many ways it's driven by multiple very strong fundamentals. Japan is the third largest hotel market in the world with over 1.7 million rooms. And you couple that with where currently cost of capital sits. It's a very strong market from a scale point of view, capital markets. And then as you discussed most recently, it's from a consumer point of view and driven by a very, very strong desire from the Japanese government. In 2016, Japan announced their tourism vision to get to 60 million arrivals by 2030. And you put all those factors together, and it's aligning the stars for our tourism industry, where we see robust demand, robust capital, and ultimately that's driving a lot of our decisions to make Japan a priority market.
Are you seeing any changes in the way that people are approaching your business? And by that, I mean, how does it compare when it comes to domestic tourists and foreign visitors who stay at your hotels?
Yeah. I mean, naturally, we're seeing Japan had historically quite an under-penetration of international brands compared to other global markets like the US and Australia. For example, branded supply makes up between 40 and 50%, where in Japan that number is below 5%. So we're seeing a propensity for consumers to shift to brands because they recognize our brands from overseas. And then to answer your question around what's changing, I think we're also we're seeing changes within our arrivals within our hotels. So in Tokyo, for example, on most weeks because of the tourism arrivals, we see 70 to 80% of our guests being inbound guests.
Abhijay, the former head of IHG said the plan was to double the number of hotels and rooms within 3 to 5 years. I'm just wondering, is that still the plan, and can you give us any more detail on that?
So that's definitely still the plan, and I think we've seen significant growth so far. Year to date, we've had our busiest year of signings, new hotels. We recently announced a new Holiday Inn in Karizawa and a new Holiday Inn in Kyoto, and that's the first. Kyoto was the first market that we brought the brand to outside of the U.S. in 1973. So our flagship brand, our largest brand family, the Holiday Inn family, continues to drive our scale, but we're seeing growth at all segments across our business. Earlier this year, we announced Garner, our latest brand, is coming to Japan. And in the same next few months, we announced Six Senses Kyoto had just opened. So we're seeing growth across all segments, and certainly that gives us strong hopes to continue our Japan growth story.
Yes, certainly seems like every other person you talk to in Sydney these days is planning a trip to Japan because of that weak yen, but eventually that currency is going to strengthen again. Japan's going to look like an expensive destination again. Is there a risk that when that happens, there might be a little bit of overcapacity in Japan?
I don't believe so. I think if you look at the data from 2019 versus 2024, where we've seen our record arrivals, volumes are broadly similar, and the per capita spend in US dollar terms was broadly similar. So I think people come to Japan, and especially a lot of Sydney-siders are up or would come to Japan because of the unique dimensions Japan offers. You could be strolling through Meiji Jingu in Tokyo and land up in Harajuku. There's not many countries in the world and not many cities in the world that offer that level of depth and that level of diversity that Japan does. So I think the long-term prognosis for tourism continues to remain solid, at least from our perspective.
Given that we're seeing so many foreign visitors, we have felt some sort of exhaustion coming from local communities. How do you deal with that as a brand, especially when you're located in these major tourist hotspots? Do you partner with some of these people who may not be too happy with the inflows?
Yeah, that's a great question, and we get that often. I think you have to put that in perspective. Japan currently is on track to get to 30-odd million arrivals. We had 31 in 2019, and this year we're forecasting to beat that. So there are some pockets, Kyoto, for example, where we've seen famous scenes. But I think where our success would be as a tourism economy would be to spread that tourists out into some of our smaller destinations that need the benefit of tourism and need the benefit in that local economy. For example, we opened a onsen resort in Oita Prefecture in Beppu, and that market historically hasn't seen luxury tourism in the onsen space. And if you compare that to 5 years ago, we wouldn't imagine luxury travelers, international inbound travelers in those markets. And that's when really the benefits of tourism can get seen. So I think there's a piece of destinational awareness because there's so much to be seen across Japan.
What's the strategy if those inbound flows start to dry up with the yen becoming a bit stronger, which is the expectation for next year?
Yeah, I think if you look at our domestic-based Japan, and then one of the reasons why we're so excited about Japan as a tourism market is we've got a very, very strong domestic consumer base in itself. We don't forecast that our inbound...
You feel poor because of rising inflation, though.
But they're still paying for hotel rooms in JP Wires. We're opening a fantastic Intercontinental in Sapporo next year, and that's another example where it will be the first luxury hotel in the city. So I think there's a lot on offer even for our domestic tourists, and our domestic tourism numbers are already back above or in line with 2019 numbers.
And you have niche offerings as well, right? Pet-friendly hotels. I love the Kimpton's brand.
Absolutely. Thanks for calling that out. We believe we have a travel and stay for everyone. And if you go to our Kimpton in Shinjuku, most of our room guests are visitors, foreign visitors. But if you go to our F&B outlets, they're pretty much 100% Japanese domestic travelers. And a lot of them actually come with their pets.
I will try to do that next time. Avijay Sandilia, Japan and Micronesia MD at IHG Hotels and Resorts. You're watching Bloomberg.
We're really just looking at the gains from the bonds because the INR has basically been pegged for quite a while.
Broadly, the market is positioned for the inclusion. However, if you were to look at it more from a structural long-term perspective, I think the move in bond yields is not yet done.
I think putting a time period to it is not going to be fair, because we are expecting that after JP Morgan, then the Bloomberg index inclusion will happen, and post that there will be a more confidence from the global investors once they have seen and experienced India, that they will come down the credit curve. So I think that this is going to have a rippling effect over years, and I'm not even going to say months.
Bloomberg TV guest speaking there about Indian government bonds ahead of their inclusion today in the JP Morgan Government Bond Index. And Shery, feels like we've been waiting a long time for this, but today is finally the day. Hard to understate the size of this market. The entire Indian government bond market valued at more than $1 trillion. It's going to be like a measured, staged inclusion, though. Today there will be a 1% inclusion in the index, but over the next 10 months that will increase by 1% per month, and until we get to that total 10% weighting around about March 2025.
Yeah, there are currently 27 bonds which meet the index inclusion criteria, right, with the total outstanding well over $400 billion. That's according to JP Morgan. And of course, the question is, how will India really adapt to these changes as well, right? Because we have seen the difficulty of doing business has hindered many investors from actually entering the market. We're talking about lengthy documentation to the complexities of paying taxes on any of those profits. And government officials are being pretty cautious about really the hot money flows that they could see from this inclusion as well.
Yeah, there is a lot of red tape to consider, but that notwithstanding, there's been a tremendous amount of interest so far. $10 billion worth of inflows, and Goldman Sachs sees another $30 billion over that next 10 months as that weighting gradually rises. And bonds are up in India about 16%, and that's since that JP Morgan eligibility review way back when in October 2021. Keep an eye on the rupee as well. That might benefit also. Currently pretty weak. We're going to have more on Indian bonds in a special online event later on today as well. Bloomberg's Menaka Doshi, author of the weekly India edition newsletter, going to be joined by T. Rowe Price and Principal Asset Management. Subscribers can watch that webinar on LiveGo or by heading over to Bloomberg.com, and that's going to start at 11 a.m. Hong Kong time. All right, here are some other stories that we are tracking. Ukrainian President Volodymyr Zelensky has signed a long-term security commitment with the European Union. The deal formalizes EU initiatives to support the war-torn nation, including arms deliveries and training Ukrainian troops. No new pledges are expected from the 27-member bloc. On Tuesday, the EU formally opened negotiations over Ukraine's membership. Polls open later on Friday in Iran's presidential election to select a replacement for Ibrahim Raisi, who was killed last month in a helicopter crash. Two of the most conservative candidates have stepped aside ahead of the vote, strengthening the chances of two other hardliners. Four men are in contention for the presidency, including the polls' only reformist candidate. Now, Mongolians are also going to head to the polls on Friday for the first vote since constitutional changes expanded the number of seats in Parliament. The changes open the door for more parties to win seats, potentially creating the most diverse collection of lawmakers yet. Voters are going to be looking for the party best prepared to deliver on promises from shared mining wealth to cracking down on corruption. More ahead on the Asia Trade. This is Bloomberg.
Webtune Entertainment, backed by Naver, saw shares climb in its U.S. debut after an IPO that raised $315 million. The online comics company pushes content from 24 million creators to about 170 million monthly active users and says it intends to use the proceeds to expand business globally. Webtune CFO David Lee told us more about their strategy.
We have a very unique business model. We can see before anyone because we're the global leader and we have this 170 million user strong base across every country and major languages that we offer, so that we can give a creator the ability to see that they're hit while they're a full-time professional, a kindergarten teacher. We have examples of graphic designers who don't realize that on our platform they have a story the world wants to see. When they have that story, we share with them as a fundamental part of the business model all of the future revenue they can have as a publisher of their own story. We've given $2.8 billion over the last 6 years to creators, and they know that we're aligned and that we're the #1 way for them to go from being an amateur to having a global voice.
Interesting. So it's not just network effects, that they actually get some compensation in some form as well. And I'm curious what the pitch to institutional investors is. If you take a look at your filings with the SEC, it's interesting. You have BlackRock, for example, purchasing up to $50 million worth of shares. But when it comes to investors outside of BlackRock, how do you explain this to them?
Well, for 30 years, I worked in other businesses, consumer tech, public companies, and transformation. And I always struggled with the idea in talking to investors how to justify being a hit-driven business, how to explain that a human judgment by one of us on a management team knows what to spend hundreds of millions of dollars on a future hit. Instead, when I talk to institutions, they love the data and AI and empowering a global base of creators. Anyone with a Wi-Fi connection on our platform could be the next hit. That source of evergreen content, I think many of us believe, is what the world needs, but what the media entertainment is looking for. It's a pretty novel approach to storytelling, and one that I think investors are really interested in exploring and supporting with us.
Well, David, before I let you go, I want to talk a little bit about the path of profitability, because you had a net loss of $145 million last year on revenue of about $1.3 billion. When will you be profitable?
Well, if you look at our last quarter, Q1 of 2024, we posted positive GAAP EBITDA, positive GAAP profit. We grew 14% on a constant currency basis, and we have the most interesting and accretive large global markets to continue to grow into. You know, our growth is accelerating here in North America, in places like Japan and Europe. So for us to continue to drive positive cash flow, which we intend to every quarter going forward, it's simply about executing in the largest market, which is, I think, why large institutional investors are beginning to recognize that the future growth is accretive with us. And it starts with our IPO today.
Webtune CFO David Lee with our colleague Katie Greifeld. And we're getting the latest breaking data. Industrial production here in Japan for the month of May. This is a preliminary number, rising 2.8% month on month, which is a big beat to economists' expectations of growth of only 2%. And it's also rebounding from contraction in the previous month. The expectation was for a rebound, given that we have seen more production of cars and related parts. Not to mention that going forward, we could get more chip-making machines, given that we are seeing an upcycle in the global semiconductor space. Year-on-year growth of 0.3%, also a rebound from the previous month. These are the preliminary numbers here for the month of May in Japan. Take a look at Japanese assets trading at the moment, because, of course, we're also digesting the jobless rate coming in at 2.6%. The core Tokyo CPI coming in faster than expected at 2.1% for the month of June. We are awaiting the open with Nikkei futures pointing to the upside of 0.4%. And the Japanese yen holding steady. It's been really a narrow trading range for the yen, still at around those levels that are the weakest since 1986. Now, we have heard from the finance minister. We've heard from the vice finance minister. Really hasn't done much in terms of strengthening the Japanese yen against the U.S. dollar, given, of course, the rate differentials as playing into this weakness. And we continue to see 10-year yields in Japan jumping because of expectations that the BOJ will need to move with a hike in interest rates in July. And as we continue to watch this, we will be waiting for the market opens with Nikkei futures pointing to the upside, Paul.
All right, thanks, Shery. Let's take a look at some of the other top corporate stories we're watching this hour. Nike falling in late U.S. trade after a full-year outlook that missed expectations. The world's largest sportswear company sees revenue declining in the mid-single digits in the current fiscal year. Much of the sales miss will be due to a weak first quarter, when revenue is seen dropping 10%. CFO Matt Friend says they're transitioning the product lineup to reignite consumer interest. L'Oreal is expecting slower growth for the overall beauty market this year as weakness in China weighs on sales. The cosmetics group told investors they see the global beauty market growing between 4.5% and 5% this year. China had long been a growth engine for L'Oreal, with consumers snapping up its high-end cosmetics offerings. The judge who scrapped Elon Musk's $56 billion Tesla pay package will hold a hearing over the recent shareholder vote, reviving the deal. The Delaware Chancery Court may take judicial notice of the vote, but is not obligated to recognize the results. Tesla has argued that the vote addresses many of the concerns the judge raised in her decision. Shery.
Take a look at how futures are setting up. Of course, we have seen a lot of fluctuations during the Wall Street session around that 54.80 level. A lot for investors to digest. Of course, we have earnings season underway, the quarter and options expiry also coming up, not to mention the volatility ahead of the Biden-Trump debate in just about an hour. And this, of course, as we continue to wait for the PCE data, the estimate right now is to get the lowest reading since March 2021, so that might give some breathing room for the Federal Reserve that they might be able to cut rates this year. Now, this is the favored inflation gauge for the Fed, and the expectation is for it to have slowed to an annualized rate of 2.6% last month from 2.8%, but still above the Fed's goal for 2% inflation. And the expectation is that the Fed will be able to cut, given that we're getting more economic reports that look a little bit weaker than expected. So Treasuries actually rose in the overnight session. First quarter GDP data was revised down. We saw continuing jobless claims climbing to the highest level since 2021. And I didn't mention core capital goods orders earlier, Paul, but we also saw the biggest drop this year. So really businesses also taking a hit when it comes to the economic picture across the U.S.
Yeah, and in terms of the US, we might get a bit of a steer on what could happen in the fiscal sense in a moment as well, Shery, because we are just minutes away now from the CNN presidential debate. There you see a live shot of the White House. It's not happening there. It's happening in Atlanta, Georgia, of course. So President Biden, former President Trump, going to be talking about their plans. A lot of focus on age, though, I think, Shery.
Yeah, I mean, many historic firsts. The oldest major party candidates to vie for that White House that you're watching right there. This is the Asia Trade. Our special coverage of the CNN debate is next.